Hello, everyone. Happy Monday morning, middle of May, options expiration week, Fed speakers, earnings winding down. How is everybody doing? Good morning, Patrick. Where is everybody typing in the chat this morning? There's just Patrick, but I see people in the background. All righty then. We'll just get straight to it. We had the Empire State Manufacturing Index coming in really ugly. Remember, it bounced last month. Well, this month it's in major contraction. Forecast 8, consensus minus 375, actual minus 31.8. We've also already had Fed speaky this morning. We got more of it coming up. Sort of stressing the pause message so far. We got Kashkari, we got Barkin, we've already had Bostic, we got Cook coming up. So, and then tomorrow morning we got Mester. So it's a week of Fed speak. But other than that today, what else do we have? What else? Not much. It's just really paying attention. But I don't know if they can really say anything that's going to rock the market. All right, now we got people in here. Good morning, Options 22. Good morning, Paul. Good morning, Jacob. Good morning, Heinrich. Good morning, Martinez. Good morning, PMG. All right, so overall, Google pulling back. What is AI no more? Google slight pullback today. Everything else a little mixed, but nothing major. Let's just refresh the groups one more time. Financial leading it higher, but only up 39 basis points. Consumer cyclical. The only thing down is comm services being led down by Google. Everything else, real estate slightly negative, but everything else is positive. Fed watch still at 84% for a pause. We still have all the double pause and then the massive string of cuts. That's what's priced in, still in greed mode. Current market valuation still upper end of fairly valued, and most things are in overvalued territory still. The PE ratio closed last week at 23.87 and the Schiller PE 28.91. So that's where we stand. The market's still very expensive. We are, let's see, 41.45 is where we're trading now. 41.52 is neutral gamma, so we're barely in negative gamma. Remember, any rallies above 41.52 is into op X, shifts us to positive gamma, and peak positive gamma is just after 4,200. Looking at the options, there's not many puts around 4,200. 4150 and then 4100 are the two key levels for puts. You do have starting to above 4150. We do get a decent amount of call gamma really starting to kick in, and then approaching 4100. So that could be a slight impetus, but you're in positive gamma territory, so you have to have some selling into that. All right. Good. Stan Druckenmiller comments very negative for macroeconomic entitlement projections. I did not see that. Thank you for putting that in there, Richard. What else do we have? We had something else come up interesting. I'll have to look back through there. Oh, Paul Tudor Jones says the Fed is done raising rates. Stocks to finish this year higher from here. Okay, I guess if you're paying for perfection, but you got to trade the price action that is. So if it breaks out to the upside, you got to trade it, but you don't want to get married to it. Earnings, isn't that ironic? Monday.com reports on Monday morning. There was really nothing. After, there's nothing again today, really, that's going to smash the market. Tomorrow morning, you got Home Depot. That's the biggie there. Wednesday, you got stuff like Target, TJ Maxx. Thursday, you got Walmart. So we do have a couple important ones, especially from a retail consumer perspective and from an inflation perspective. Good morning, Anissa. All right. So we're still, so it's up for today, 16 basis points so far. But inside Friday, we have an inside day. And if you look here, it's even got a whole bunch of nowhere since Friday the 5th. I am watching. Here's exactly what I'm watching. because we've made this little stair step lower highs. So we start breaking above 41.65. 41.73 then becomes key, but then my major targets 41.87 area, then 42.01 to 42.06, and 42.01 is right where this little top of the candle bodies are. So nice cluster to the upside. So that's what I'm watching. To the downside, you see is again stair stepping, but equal lows here, or roughly equal lows. But we start breaking below about 41.25. 41.11.75, and I will pay attention to these lows here. They are important to me because normally I focus more on the closes, but these lows are lining up really nicely. So 41.11.75 and below there, then I'd be watching for the breakdown play. 4100 will be key, but then below that you get some interesting breakdown play. But in here, between on the major levels 41.11 and 41.64, it would have to be short-term signals only. Short-term signals. Nothing to get married to. Hey, Rich. Hey, Rich. So, NASDAQ still holding the rotation zone. Pull back to the rotation zone in the prior breakout level. See the key high from Tuesday, April 4th, reinforced by the high of Monday, May 1st, reinforced by Monday, May 8th, and now the support from Monday, May 15th. Rotations up. Rotations up. There's still not much stopping point. I mean, if you're going to use your short-term levels, you just want to watch, and it's already closed above the 62.5. So 13,470, 13,5 roughly, and then 13,541 to 13,581 is very key on a breakout play for my perspective. On a breakdown play, if it does, it's got to get back through about 13,350 before I'm interested in the short side at all, because you're pulling back into this key resistance, and even that. The major area I'll start watching is we start getting below about 13,225 to 13,200. Not only is that the bottom of the daily rotation zone, but also this nice little trend line. And then the major target would be the 50 EMA. Daily cycles are at the top, by the way. NASDAQ weekly cycles bounce back up to the top. So we'll have to see if those roll over. I didn't do the weekly cycles on the S&P. Let's just take a look at that for the start of the week. Weekly cycles still moving down, but not anywhere near the bottom. So far we've had a choppy to slight pullback. 2 weeks down, and we'll see how this week ends up with OPEX again. The Dow, we still have the double top in play, even on a rally. Not much to talk about. On a breakdown, 33,175, and then 33,000, then 32,877 to the upside. On any rally, I'm going to 33,550, and then 33,735. Good morning, Todd. What did he give up? What was his target? Did he give a target options 22? Did he give a target? I did not see a target, but I didn't hear the whole thing. Russell, still breakdown areas about 1735, breakout area 1765. Other than that, it's chop. VIX climbing a little, but nothing major. Remember, we do have, again, I'll say it again, OPEX. Don't get caught off guard by that this week. 1836, 1835, I'll start paying more attention. The little daily VIX still caught in the range between about 1530 and 833. Thanks. No target. Thank you for. I didn't think there was one, but I wanted to verify because I could have missed it. DAX not interested on the bearish side until below 15,811, or the bullish side until above 16. Right now, it's just caught in another wide trading range. The notes Paying attention if we start dropping below 115. But other than that, this has just been caught in a massive trading range, basing still right below the official weekly close trigger point. Still, it's been confirmed but not triggered, but it's still basing sideways right below that. And since it's confirmed, unless it rotates all the way back down, either with a close below 111.19 and a half or a trade below 110.22, it will stay in play since it's confirmed. There's no extended sideways moves that's going to invalidate it now. It's just either it moves back down. It's not been officially triggered though, so still waiting for a trigger there. We did have some interesting stuff. Dollar index, we're getting a slight little pullback after a breakout next week. But as long as it stays above the daily rotation zone, I will watch for another rotation back up and a break above this 102.30 area. Crude, a little bounce here, but there's just not a super strong play just yet. Now, a close above Friday's high does trigger a very aggressive percent beat buy because it would just be into the daily rotation zone. Gold, completely flat. So still in consolidation. Silver still has a double top in play, and any bounce up will be looking for rollover plays. Copper still holding the very low. We could see a little continued bounce, but that would be to about 380 would be a first target there. So not much. US dollar, Japanese yen. Friday triggered the double bottom. And not quite yet to the first target, 136.45. Then you got 136.95, 137.44. Euro, would not being surprised to see a little bounce after the 2-day pretty heavy selling, but anything now would be in the first cross rotation zone, watching for a rotation back down. Pound finished the double top and a little bounce back today. But other than that, there's not much. We'll watch for another rollover play potentially there. Bitcoin trying to bounce back into consolidation. Tesla still, if we start breaking below about 166, we'll sit up and take notice. We do have a couple gaps down here, a gap filled to potentially 161.20, but we're still have the channel flagging up. Overall, watching for the next breakdown play there. The market's still pumping. Well, it's still an inside. This I wouldn't call a bunch of a pump. Well, if they get to the bottom without any major pullback, I will be targeting the breakouts to the upside. Well, that's what I already went through, William. Overall, still long term, I am still bearish because the stuff I say still, but that doesn't mean short term we can't break out. Now, medium term, still need the S&P cycles. They're rolling over on the daily and they're heading down on the weekly. We're still in consolidation. That's why I gave the levels that I needed to start getting below 4111, but then really getting below 4100, which is the 50 on the daily, before I can get short-term more aggressively bearish. But it's just trading into a key support level. Below 4052 takes me into very bearish. On a breakout sense, we have to start getting above 4200. Everything else is still in a huge consolidation pattern. And there's been tons of selling up here. From not just recently, but even back in February, even back in mid-December, and back all the way in September, and a test in mid-September before the big sell-off. So that's the way I'm looking at it. But we need a close above about 43.20 before then. If we get a close above 43.20, then I will go into more sustained bullish mode. Probably could be even through the end of the year. That is a very key level But even a break to the upside takes us into very major resistance. So it would be more medium term bullish, but then 43.1925. I'm just going 43.20. Until that happens, we're caught. This is why, even with cycles heading down, we've gone, remember, it puts downward pressure, but you can get, it's been slightly choppy with just only a 2-week minor pullback. So, yes, has it pulled back? Yes, but it's still choppy and we're still in a range. Again, no aggressive bearish plays until we start breaking key levels. Google, I'm watching for the pullback. It's very overextended. And you have a gap fill here, potentially. But until you break below 115, nothing. Okay. And your next, if it just pauses here, remember there's two kinds of corrections. A retracement or roughly a sideways. If it holds up above 115, the next key target area is 122.50 to 123. Big gap up on Monday. Key levels. They're still from before. 152.78 on a closing basis. And then above that, 165.93. Key support coming in at 140 now. There you go. For Monday.com. With that, that's where we sit. Oh, I forgot the spiders and the Qs. What was I thinking? How can you forget about the spiders and the Qs? Still the S&P analysis. 413.75 is around the breakout area. We get above there. 415.75, 417.60. Let me update these now. Let me update these. If it does hold and get the breakout play, still again 415.90, 417.60, 419.36, 421.09. Key support, I'm bumping this down just a hair to 408.90. Start getting below 408.90, 407.21. Then I'd target the 405 area. Between that, you have the shorter term levels because we're in congestion consolidation. So any drops towards this 408.87, 408.90, I'd watch for a reversal pattern. Any rallies to 413.75, I'd watch for a reversal pattern. The only thing that changes that is if we break out or break down from that range. The Qs. Let's see, I just want to go off, get a little bigger picture here on the Qs. Uh, 326, 327.60, 330.74 are the key levels to the upside. To the downside, again, any pullbacks to roughly about 323.60 to 323. I'd watch for still continued reversal patterns going up. Below 323, you have your major support, 320.85 to 321. So, all right, now we're done. Now we are done. Everyone have a wonderful trading day. Again, pay attention. I don't know if it will move the market or not, but we do have Fed speak coming up. Other than that, still a quiet day in terms we already had in the NY Fed, but nothing really seems to disturb this market. That's why I'm still cognizant that we could get a rug pull, especially if something happens with this debt ceiling issue, but we'll have to see. We will have to see. I've given my key breakout and breakdown levels, so that's what I'm watching for. And even the longer term, if it closed above that 43.20, then have to get into pretty severe bullish mode going into possibly the rest of the year. With that, I shall talk to everyone later. Bye for now.